start to ease.
All right, that is some important opinion coming in, and that's everything that we're tracking globally. But let's now talk about the cues that you should track as we get into a fresh trading session. Our research team joins us now with the trade setup. Nigel, Rima, and Vaishta all join me now. Guys, a very good morning to all of you. And Rima, let me come across to you first. We saw a sharply lower close yesterday, over 1% lower on the index. How's it looking this morning?
Well, absolutely. Especially towards the end, the selling pressure picked up, but the Nifty managed to hold on to that 18,000 level, a level which a lot of technical analysts were watching. That said, on the upside, we seem to be facing resistance around that 18,250, 18,260. For the last 3 trading sessions, we got there, we were hovering there, but we couldn't quite conquer it. So that continues to remain a level to watch on the upside. FIs have been selling in the cash market now for 9 consecutive trading sessions. Yesterday, the FIs sold big, 2,620 crore in the cash market, while the DIIs bought 773 crores. So net-net, we're looking at a net institutional sell figure of 1,900 crore rupees. As I said, the broad range will be 18,000 to 18,250. We've been talking about the US markets. They managed to end higher despite hawkish-sounded FOMC minutes, as well as the disappointment on the ISM manufacturing data. But for our own markets, the focus could be on crude prices, which have fallen 10% in the last 2 trading sessions. Brent crude prices were at $86 per barrel very recently, and now they're down to $77.50 per barrel. And the dollar index, the decline in the dollar index is positive for risk assets like India. The dollar index was at 104.5 yesterday, and that's eased down to levels of 104 as we speak. So this morning, there could be an open, as the SGX Nifty is suggesting, the opening could be in the green. Can we conquer 18,250? That will be a level to track, and there will be a lot of focus on the individual quarterly updates. Back to you.
All right, so there's a lot of focus on the individual quarterly updates. So a lot of these individual names could be in focus today. Vaishta is here with that entire list of stocks that you should keep on your radar. Vaishta?
Hi, Pavitra. Good morning. Let me start off with Adani Ports, wherein the December total cargo volumes are up 8% on year-on-year and has come into 25.1 million metric tons. In fact, for the 9 months of FY23, the total cargo volumes was also up 8% on year-on-year basis and has totally come into 253 million metric tons. Moving on to Bajaj Finance, which has their quarterly business update, the company has recorded the highest ever quarterly increase in its customer franchise of 3.1 million. In fact, the new loans booked have come in at 7.8 million, which is to be compared with 7.4 million. The AUM has grown by 27% on year-on-year basis. Marico also has the Q3 FY23 business update. The company says that the urban and premium segments have maintained a steady growth in the past quarter. Also, the India operations saw a mid-single-digit volume growth. HPCL has forayed into a petrochemical business with pre-marketing of HP Durapol brand polymers, which is a precursor to marketing of HPCL Rajasthan Refinery petrochemical products. Now, this HPCL Rajasthani Refinery is setting up a new 9 million tons capacity in Rajasthan. Mahindra Finance, the news is that RBI lifts restrictions on recovery via outsourcing. For RBL Bank, there is another Q3 update, wherein the total deposits have grown 11% on year-on-year basis, have come in at 81,700 crores. The CASA is also up by 18% on year-on-year basis. And the last stock is IRB Infra, wherein there is a stock split. The company has approved the subdivision of 1 share into 10. Back to you.
All right, that is a lot of stocks. Vaishta, thanks a lot for bringing us that entire list. Finally, let's also talk about all of the cues from the futures and options space. And Nigel, like Rima was pointing out, that is a big FII sell figure.
Well, that's right. And the net institutional number, the sell number is close to 1,900 crores. We haven't seen that sort of a number in the last 3 months. The last time we saw such a large number was in early October. So that's a bit of a worry, the kind of selling that we're seeing from the FIs. And the FIs, they have gone all in on the short side. And there's no other way to look at it besides they're viewing this market a little bit bearish, at least in the near term. All the cues coming in there. They sold in the cash market. They added shorts big time, close to around 22,000 short contracts. The short positions from around 45%, it's moved all the way to around 64% or thereabouts. They bought more puts than calls. And the important one is they wrote calls and they wrote it very, very aggressively. So all the cues, you can't hedge yourself. The FIs, they haven't. So they've gone with bearish cues for today. The question is, are they going to get stuck on the wrong side? In terms of the call writing, let's pull up 3 strikes. The 18,100, 18,150, 18,200 call. Between those 3, they added 2 crore shares. So that's aggressive writing that we've seen out there. And that's what caused the PCR to move from more than 1 to 0.72. remember at around 0.65, 0.7, that's where we see a bit of a bounce on the index. So if the index can hold on to this gap up that we're looking at, maybe in fact risk reward could favor a buy. The support level is at around 17,900. I'll give you two reasons for that. The 18,000 put has the highest open interest, point number one. The second factor is the 100 DMA comes in at around 17,900. So keep that in mind. And the 18,250, in the last two sessions, we've gone there 3 or 4 times. And then we've seen some bit of, pullback. So that's a bit of a resistance zone. SGX Nifty is suggesting a gap up. Holding and building onto this gap up is very, very important in today's trading session. My guess is you'll get an intraday dip that could get bought into with that support zone of around 17,900 to around 17,950 odd. Back to you.
All right, that is the trade setup for today. Nigel, Reema, Vahishta, thank you very much for joining us and prepping us up for that. But with that, it's time for our first short break on the show. Up next, Microsoft CEO Satya Nadella tells CNBC-TV18 that India is an exception in the challenging global scenario. Also warns of a difficult 2 years for the tech sector, except from that exclusive conversation after this short break.